What in God's name is going on here? Michael Burry has crawled out of his little hibernation and he has made a massive call. So massive, in fact, that Alex Karp had some very selective vocabulary when it came to describing Michael Burry and other investors that haven't believed in Palantir's growth story thus far and are now shorting the company. We'll watch his crash out in 1 second, but there's a few things we need to talk about. Investor Michael Burry disclosed on Monday that his hedge fund has taken positions against tech heavyweights Nvidia and Palantir. Nvidia and Palantir, you have to have some major nuts to short either one of these companies, and apparently his stake is worth over $1 billion in shorts on both of these companies combined. Now, if you're unaware of who this guy is and why this is important and why the market might be reacting the way it is right now, just know, in short, very punny, Michael Burry had one of the best investment calls of all time, calling the top right before the great financial crisis. And therefore, he gained a lot of rapport, a lot of respect from the investing world. Hey, if you can sniff out something as large and unforeseen as this, an economy that people deemed was too big to fail at the time, he was willing to take such an incredibly contrarian approach and make a shit ton of money shorting the market. There's literally a movie about it. That's how absurd this call was. Now that begs the question, does Michael Burry know something that we don't? Because why is he so confident that he's willing to throw over $1 billion at shorting two of the hottest companies in the entire world right now? Debatably the most important companies in the entire world. There's a ton that we need to talk about here and understand before we really get to the bottom of this. First, Michael Burry believes that we're in an AI bubble similar to that of the dot-com bubble, and we're going to talk about the data that he presents, the data that we can find to support that claim, and also take the opposite approach. And the first tweet we'll look at is this one. Michael Burry says to subscribe. Sorry about that, wrong tweet. Is Michael Burry right in his claim to sell everything right now? And he's putting his money where his mouth is. He's shorting Nvidia and Palantir massively. Is this justified, or is there more to the story? Now, first, as always, we need to look at some data. We need to look at some facts to really tell a story and paint a picture here. Because although Michael Burry debatably made one of the best investing calls of all time, it hasn't exactly went his way the past few years, actually since 2008. Let's talk about it. One of his biggest recent calls was his big short on Tesla, a measly $530 million bet against the company in May of 2021. And we can see that basically was the lowest that Tesla has been over the past 5 years. But you know, we're not going to harp on the guy. Everybody makes mistakes. After all, nobody in their right mind can predict this market with absolute certainty. We all know that. So was this just an outlier? Are his predictions usually spot on? Is this thought of the AI bubble actually real? Because if you're shorting Palantir, in Jensen Huang, CEO of Nvidia's words, the most important enterprise software stack in the world today, and Nvidia, the literal powerhouse of the AI revolution, you better be certain that AI is a bubble and valuations must come down. Burry says sell. Should you too? Should you listen to him? Well, let's take a look at some recent past history of Burry's calls. He's called a crash in December 2015, May of 2017, September 2019, took a massive bearish bet in March 2020, the bottom of the COVID pandemic, February 2021, which had some success initially, called for more failures in September 2022, the bottom of that pullback, January 2023, and August 2023, shorting the market. And we all know that the market has basically went like this from there. So not a great performance in the last few years. And I don't know about you, but I'm getting this sort of sunk cost fallacy vibe from Michael Burry here. And I want you to pay attention to his Twitter handle right here, Cassandra BC. Why in God's name is his Twitter handle Cassandra when his name is Michael J. Burry? Did he transition to a woman? Did he get a legal name change? No, it's not that. You see, Cassandra is actually a reference to Greek mythology, and we don't need to get into the details, but basically Cassandra received the gift of prophecy, the ability to tell the future, prophetical. But because she didn't go ahead and date Apollo cursed her and made it so none of her prophecies would be believed by anybody. She had the ability to tell the future, but was literally cursed so that nobody on the planet, not even her own family, would believe her. She went on to accurately predict many things, including the downfall of Troy, and this inability to be believed by anybody became known as the Cassandra complex. Now, I don't know about you, but this sounds like Michael Burry is calling himself a prophet and is under the assumption that he is unable to be believed and he has the power to tell the future. I don't know how else you could interpret that. I'd love to hear what you think, but that's the gist that I'm getting here. Now, I don't know about you, but somebody who really hasn't predicted anything super accurately since 2008, almost 2 decades ago now, and also refers to themselves, literally a self-proclamation as a prophet or someone who's not able to be believed by investors in this case, definitely draws some skepticism, at least from my eyes. But we aren't here to judge Michael Burry by his Twitter handle. After all, that could have all sorts of different meanings. What we are here to judge is what is his fundamental argument to sell right now, to short the biggest AI software company in the world right now in Palantir, and the biggest AI infrastructure play in the world, Nvidia. What is his fundamental argument of why AI is in a bubble and why these companies should both be shorted right now? Just yesterday, would you look at that? The great thing about looking at Michael Burry calls is he always leaves a nice paper trail for us. And on Twitter, just yesterday, Cassandra, the god of prophecy himself, Michael Burry, left us a good idea about the things that he's looking at and he's basing some of his investing decisions on right now. Cloud segment year-over-year growth comparing 2018 to 2022, and more or less the ChatGPT era, right? Since the ChatGPT moment in 2023. And you can definitely see in the past the growth rate of the cloud year over year for these companies, for Amazon, Alphabet, Microsoft, AWS, Google Cloud, and Azure, respectively, is actually less today year over year than it was back then. That is pretty interesting. You would think everybody's talking about how big the AI demand is, and if that AI demand doesn't come through, then these growth rates definitely don't justify a much higher future valuation. Another one, US tech capital expenditure growth is matching the tech bubble of the 1990 to 2000s. Quite spooky. Anytime we see a comparison to the dot-com bubble, we certainly get a little nervous. This graph on its own definitely doesn't tell us anything important, at least yet. We need some context as to why companies are spending so much money on CapEx, because if the money's there, then it makes sense. If the money's not, then obviously there's a disconnect here and it needs to be resolved in the form of a AI bubble market crash, right? And then the classic chart, which we've covered a few times on this channel already, but of this vendor financing, this circular spending between companies like Nvidia, Microsoft, OpenAI, CoreWeave, etc. The general idea is that Nvidia is the epicenter of the new AI industrial revolution. They're the engine of basically everything, and all these companies are throwing money at them, while Nvidia is investing in those same companies to later spend that money back on Nvidia products. Yeah, it gets a little weird. But like Michael Burry is suggesting over here, these aren't the charts you're looking for. You could go about your business. Again, almost inferring that nobody will ever listen to him. No matter what he says, no matter how many times he's wrong, he believes nobody on this planet is going to listen to him. Now, to be completely honest, I don't even think those charts really justify or even come close to justifying shorting Nvidia or Palantir. I'll bring up some more charts at the end of this video that back up the bearish argument. But first, we need to look at the other side of the coin. And for that, what better way than to start with CEO of Palantir, Alex Karp? What did he have to say about Michael Burry and those people that haven't believed in the Palantir growth story thus far, even though the stock has basically been straight up since they've been saying it when Palantir was around $10. Today it's trading at nearly $200.
It's unknown, honestly. You have this massive growth, but currently, as far as I can tell, the two companies he's shorting are the ones making all the money, which is super weird. Like, the idea that chips and ontology is what you want to short is batshit crazy.
Well, I think you get the idea. He doesn't exactly agree with Michael Burry's synopsis on the whole situation. And should you? What do you think? Should you believe in the Palantir growth story? Do you believe that Palantir deserves just about the largest valuation on the entire market by a factor of 2 to 5x? There's literally no software company valued like it, but the argument is they're one of one. They don't have a comparison. They should be in a legion of their own, and that's what you can see here. You'll continuously hear this term, the rule of 40, which is most simply just summing your annual recurring revenue growth, the growth rate, and your profit margin. And the idea is if you're above or anywhere really near the rule of 40, then your company's doing pretty well. You're growing pretty fast and you're rather profitable. A lot of software companies don't exactly have a great balance. They may be growing really, really fast, but they're losing a ton of money. OpenAI, which we'll get to in a second, because they play a massive role in how Michael Burry sees this market. I can guarantee you that. But hold on, we need to look at Palantir, and you can see they are in a league of their own. It's frankly not even close. They're growing exceptionally fast while being extremely profitable. Now, this is just for their peers, enterprise software companies. We can see that the elite companies fall beyond this rule of 80 frontier. Palantir with 114, Nvidia with 120. No wonder this company has literally been the fuel and fire for the entire market rally over the past 3 years now. Eli Lilly, that might surprise you, and TSM, Taiwan Semiconductor. You can see some of the other Mag 7s around here as well. And we don't even need to go into all the great things that Palantir just announced with earnings. They beat bottom line, top line, they beat every single line there is in a financial statement. But the only question at this point is the valuation justified? So here's where we're going to flip the coin. We're going to check out the other side of the argument because we know what Burry thinks. It seems that he believes he's a prophet, can predict the future with a pretty good degree of accuracy, and that nobody believes him. Let's look at some facts. Let's look at some data. What is the point of looking at opinions? It really doesn't matter at the end of the day. And here we gotta start with the money. Where is the money going? Well, if you haven't been living under a rock at this point, you may be under the impression that AI spending makes up a lot of our economy today. In fact, some may say that it is holding the economy up. And what do you know? The Greek mythology references just won't stop today. First, we got Cassandra with Michael Burry, and now we have Atlas, AI spending in this case, holding up the world economy. And no, that's not much of an exaggeration. In fact, CapEx in AI data center build out is now contributing more to GDP growth than consumer spending, than the dollars that you are spending every day in this economy. More of the growth's coming from these mega cap tech companies that are investing in AI data center infrastructure. A lot of that obviously coming from Nvidia. We're getting there. And to get an idea of the scale of money that is exchanged between these companies right here, let's just consider OpenAI, considered to be the fastest growing AI software company in the world, and Nvidia, the overall AI infrastructure pure play. They strike deals that look something like this. Nvidia says, Jensen Huang, CEO, says to Sam Altman, CEO of OpenAI, hey man, for every 1 gigawatt of data center that you deploy, we'll invest $10 billion into your company. And that is quite the offer for a company like OpenAI because they lose money out the waz. They literally pee out money. So Nvidia will invest $10 billion in OpenAI for every gigawatt of data center that they deploy. Enough power to power 1 million homes. Keep that in mind. That's a lot of power. That brings up a whole bunch of separate issues. And for OpenAI to build out this massive data center, they need to buy anywhere between 30 and 50 billion dollars of equipment from Nvidia. And don't worry, Nvidia promised to do this up to $100 billion. So Yeah, we're looking at anywhere between $300 and $500 billion from OpenAI alone over the next 5-6 years. So yeah, when deals start to look like this, you start to maybe believe in the AI growth story. If someone's willing to invest this much money, like in OpenAI, they must see the demand, right? And we're not going to get into this. I cover this deal making between these companies in this video here if you're interested, but basically this happens with everybody. Nvidia says, hey man, we'll take a stake in you. We saw that with Intel. We'll throw you some money. We saw that with Oracle, CoreWeave, OpenAI, and nobody else has a choice but to go back to Nvidia to buy the infrastructure that they need. Everybody is sipping the Nvidia Kool-Aid. It's literally like crack. And that's no surprise, at least for the time being, because Nvidia basically has a monopoly on the generative AI market. We just saw that in Jensen Huang's GDC, Nvidia's keynote that they do every single year, the Super Bowl of AI. They broke down just how OP, gaming term, overpowered, Nvidia's system is compared to just about everybody else. Now, this gap will close with time. Companies aren't going to be able to continue to pay, $60,000 to $80,000 per chip, especially for Nvidia's next platform coming out, Rubin Ultra. But at the end of the day, we just got to look at the facts. The artificial intelligence chip market size, straight up. The data center market size, straight up. There's about 1 million different charts I could show you about AI data center infrastructure, AI chips, cloud service providers. Basically, all of them are in an all-out uptrend. But at the end of the day, a lion doesn't concern himself with the opinion of the sheep. Jensen Huang, why do I say the lion? Well, I think we all know that Jensen Huang, as the CEO of Nvidia, the company that currently runs the AI revolution basically from top to bottom, you would think he has the best pulse, the best insight into the industry. After all, he's literally deal making with these companies every single day. And if he's deal making with these companies probably, if they're willing to buy literally hundreds of billions of dollars worth of chips, then I think it's pretty safe to assume that Jensen Huang has a good idea of where these projections are going. Should you listen to a finance bro sitting behind his desk on Wall Street, or should you listen to the founder and CEO of Nvidia, the one actually selling the compute? That's up to you to decide. But nonetheless, he says that AI data center infrastructure spending is going to be $1 trillion by 2028 and $3 to $4 trillion by 2030. Way beyond what any experts think. And so the flow of money looks basically something like this. All the big cloud service providers, all the big tech companies that are blowing a ton of money on AI data center infrastructure are going to Nvidia, drinking the Kool-Aid, sniffing that crack, because they need to be the ones that reach AGI, because the amount of profits to be made there are, what they're saying is ungodly. Now, all these companies also buy software services from Palantir, their ontology system, their ability to take all the data you have spread across all your silos at your company, all your different teams, all your different management. They take all that data to drive business insights. Hey, based on this, and this, you should do this next. Obviously, we're oversimplifying here. We're not going to break down Palantir's business model and company in much detail. I do that in this video here if you're interested, but I think you understand why that could be so valuable if they're able to execute, right? Every single company in the world has a need to collect all their data into one centralized location under one umbrella and drive insights from it. Make themselves more productive, more efficient, save more money, make more money. You get the idea. And what do you know? Nvidia and Palantir actually just struck a deal. Just last week, the two arguably most important companies to the AI world right now struck a deal. Very interesting. And we're seeing the Michael Burry short. Now, I don't know if it was abundantly obvious. I'm trying to be unbiased here. But as an engineer, I definitely lean on the side of innovation. And especially if the money's there, then it would make sense that this investing cycle is different than the age of the internet, right? But we need to ground ourselves. Let's look at some of the data that may support the bearish side as to why Nvidia, why Palantir, why these companies don't deserve to have the valuations that they have right now. And I'm telling you right now, OpenAI has a lot to do with it. So if we just look at this chart here, I think you can probably guess where we're going with this. But OpenAI, they actually make a lot of money. I mean, they've grown from basically 500 million in middle of 2023 to about 12 to 13, and now Sam Altman's claiming much, much more than that in 2025. So from just 2023 to 2024, OpenAI grew from about 500 billion to, let's say, 3 billion. That's a 600% growth in revenue. From 2024 to 2025, we're talking about 300 billion to 12 billion. That's a 400% revenue growth. Now that growth is absolutely insane. And as we talked about earlier at the beginning of this video, Palantir, their rule of 40, they're at something like what, 120? The addition of their growth in revenue plus their profit. You would think OpenAI's up there, well, they lose a lot of money. So yeah, they're making about $13 billion per year right now. That number could change very soon, but let's just stick with that assumption, $1 billion per month. Yet their losses are increasing. Why would their losses be increasing? Well, we just saw with Nvidia, they're basically having to spend 3 to 5 times the investment that they get just to build out this AI infrastructure. And let's just say Nvidia is not the first company that OpenAI has struck a deal with. AMD, Broadcom. So yeah, simply put, they're losing a shit ton of money right now. They're projected to lose somewhere about 42 to 50 billion dollars before they become profitable. So yeah, I mean, do with that what you will, I guess. I think this is where things get a little sketchy. Yes, Sam Altman can go on CNBC, go on Twitter, and talk about how the demand for ChatGPT, for Sora, for whatever other AI products are out there is absolutely enormous, and it's only accelerating. The AI adoption growth curve is accelerating, but if that doesn't come to fruition, which a lot of people are afraid of, then obviously these valuations make no sense. And we can see that the stock market, isn't solely reliant on AI, even though it might seem like that, even though that's about every single headline that is jammed down our throat nowadays. There's a lot of other stocks out there, right? Some of these other companies we put under the category of discretionary spending. Just think items or services that you don't necessarily need on a daily basis. You might buy some solar panels on your house if you had some money in the bank or interest rates were lower, but right now it just might not make much sense to you. And solar panels is just one example. You could imagine any item that you want but don't really feel the need to buy. Yeah, all that spending on items like that is basically down. And why is that important? Well, there's not really much support for the overall stock market other than the AI spending companies. All the discretionaries, that spending's going down. And so if the AI stocks are overvalued, in a bubble, coming to the point of inflection, a big crash on the horizon, if those things are true, then the whole market's in a whole boatload of trouble. Another chart that a lot of people are paying attention to is the Buffett indicator. Why wouldn't we listen to the Oracle of Omaha? The Buffett indicator, US stock market value to GDP. Basically telling you how much are people willing to pay for stocks compared to the GDP of the United States. And you can see it's reached a level that has never been seen before, probably up closer to here now. Another chart in the same realm, the same idea, is the 10-year PE ratio. We can see that we are now reaching that point of bubble territory, the internet bubble was 3 standard deviations above the average. Now this is where I pose the question to you. Remember, indicators like the PE ratio, like the Buffett indicator, they're comparing these indicators to historical averages. Now, a historical average of a PE ratio isn't always the most helpful, especially when a paradigm shift is taking place. In other words, simply put, if in this world of AI, demand, spending, money that's involved in this industry is all increasing exponentially at the same exact time, not just from companies, from countries, from sovereign wealth funds, from the biggest asset manager in the world in BlackRock with 13.1 trillion in assets, does it make sense for a P ratio now to be a little bit greater than it was in 2008, 2015, 2020. The growth rate of these technologies is faster than anything we've ever seen in human history. So yes, obviously, a P ratio isn't going to tell you the full story. Anything comparing back to historical valuations probably isn't going to give you a very accurate picture of what's going on here. But either way, people are scared right now. A record 54% of investors say AI stocks are now in a bubble, including our good friend Michael Burry, who claims nobody listens to him. He has the crystal ball. He is cursed with this prophetic knowledge, and nobody will also join him in the big short, the next big short. Yet 54% of investors think that we're in a bubble. So literally taking the AI is in a bubble approach is actually not even contrarian at this point. That's actually the majority of investors. I think a chart that Michael Burry should be paying more attention to and pushing all over his X account, his Cassandra account, is this one right here. We looked at a bunch of different information today talking about why AI stocks may be overvalued, why they may be undervalued, why we may be in a bubble, why we may not be in a bubble. But at the end of the day, is there cash to support the stock market rally? Because if there's no cash on the sidelines, then the only thing available to the market is selling pressure, right? When people have very little cash, they don't have the opportunity to buy dips that happen in the market. And right now we're sitting at one of the lowest levels of average cash we've seen in a very, very long time. And that's okay as long as the stock market remains in a chop, neutral, or upward trend. The second you start moving down, people get afraid because they don't have much cash to spare. All of it stuck in the market, so they pull out and run for the hills. If anything, I think this is the most damning indicator. Although I think there are plenty of good reasons to be optimistic about Nvidia and Palantir in particular. So is the next big short here? Is Michael Burry's call to sell his $1 billion plus short on Nvidia, on Palantir? Is this a smart thing to do? Is he about to get absolutely short squeezed? I'd love to hear what you think, because at the end of the day, I think there's a lot of arguments to be made on both sides of the coin. Obviously, nobody has a crystal ball. We can't predict this with any certain amount of accuracy. But I would say at the end of the day, the companies that should be shorted in this market probably aren't Nvidia and aren't Palantir. I think it would be some of the more unprofitable players that haven't quite proven themselves yet. So I want to hear what you think. Do you believe Cassandra? Do you believe the prophet sees the future? And what are you doing about it? Are you selling out? Are you buying in on these dips? Thank you for watching. I hope you enjoyed. And let me know if you agree with Burry or do you disagree with Burry. What does the future behold? I'll catch you in the next one. Bye-bye now. Bye-bye.